And Instagram is live too.
Perfect.
It has like a delay on it. So we are live on YouTube. We'll get started in a second, just making sure everything's clear.
Perfect. There's no echo on my end, right? All like the audio is good.
No echo. If you are live, go ahead and send a message. Let us know how the audio is. I'm gonna double check it right now. Make sure background noise.
Yep.
Okay, it has echo cancellation automatically.
Yeah, me too.
All right. Well, how's everybody doing today? Today's going to be a little different. We're actually going to we have Andre here from Edgeful. He's a day trader, and basically his mission is to turn complicated data into an actionable process for day traders.
Yeah.
When it comes to trading, leveraging technology is a big aspect of that. And so this is just a tool that can be very useful. Before we get started, though, Andre, if you guys do have questions, make sure that they are thoughtful questions. Don't just throw something out there. I'm not gonna read it unless we're already done. Let's respect Andre's time. He's a very busy dude. But for the most part, this is this is a tool. This is a tool that I've been looking at, been watching, using it, and I need to know more about it. Education is always the number one thing first, to educate yourself. Here's a tool leveraging technology to uncomplicate all the data. And I'm going to try to help you guys out there on TikTok also. So before we get started, real quick, Andre, I wanted to ask you, and these are the topics, guys. Gap fills. We're going to talk about gap fills. We're going to talk about weekday personalities, maybe something new, average true range, volume, options. And I also wanted to ask you about the macro calendar. If you can show people, a lot of people like to look at the macro calendar also.
Yeah.
Andre will be more than willing to show us that.
For sure.
So again, let us know how the volume is, if it's working out. But first, Andre, where did you grow? You're a trader. Where did you grow up, and how did you get started in the market?
Yeah. So my name is Andre, everyone. I'm the founder and CEO of Edgeful. And I lost you here a little bit. Are you still here?
Yeah, I just put you on the spot.
All right, perfect. So I'm from New Jersey. I currently live in Miami, and I'll just go into kind of like my background and like what my expertise is. So my background is in finance and accounting. I was an analyst at a hedge fund in Boston called Weiss Asset Management. Then I was an analyst at Goldman Sachs for 2.5 years. I left Goldman and I started to trade on my own. And in my education and like trying to learn how to trade, I found this concept called the gap fill, which is a pretty basic concept. I'll get into it later, but it was kind of like spoken as if it happens all the time, and like it obviously does not. Like nothing in the markets happen all the time. So given my background in finance, like I'm very comfortable with Excel. I have certifications. I find any excuse to kind of go on Excel and play with things, like kind of like look into data. So I downloaded a bunch of data from the internet and built my own reports in Excel of the gap fill. So I found out how often gaps upfill, how often gaps downfill. And it was really cool to see because I can actually like directly apply it to my trading. Then I started to build more and more reports into my Excel file until it became this like monster of a file that was like no longer really usable because I couldn't like change any of the assumptions, and it just became like very hard. Like a lot of this stuff is not meant for Excel. So I went online looking for a product that can kind of like break down how often do things happen, like how often do certain things occur. Like for example, a gap fill, like very simple. And I couldn't find any platform that would show the data in the way that I wanted to see it. So that's kind of like the story of how Edgeful started. And I was like, I think that there's definitely a space for this product because there are people that have less Excel experience than I do, that there's no way that they're gonna be able to look at the data because I was having trouble with it, and I have a ton of Excel experience. And I know that Excel is not for everyone. So what we want to do is make sure that we like break down all that data into something that you can actually like use, digest, and like is pretty to look at. So that's kind of the story of Edgeful. We want to be able to put like the data in the hands of the traders, because trading on emotions, as I'm sure everyone knows, does not work at all. So yeah.
Right, 100%. So democratizing the data that people have, putting it in their hands,
Correct.
simplifying it, which is the number one tool for any industries to simplify things and make it a lot more clear. Now, I know people are going to know, you said Goldman Sachs. You did work at Goldman Sachs. What did
Correct.
you do? I'm a little interested in this. What did you do at Goldman Sachs a little bit? Can you give us like a little day to day? Just
Yeah.
want to hear it.
Yeah. So I was an analyst in the wealth management department. So my workday, just kind of like day in the life, my workday starts at 7 a.m. and ends at 3 a.m. So I'll just repeat that one more time: 7 a.m. to 3 a.m., not 7 a.m. to like 7 p.m. That's like a 20-hour day every single day. It was like nonstop. I mean, they're the best in the world, but the way that the work style is kind of structured is they give you something that takes legitimately 3 to 5 days to do, and they make you do it in like a day and a half. And when you're halfway done with that project, they give you another one that also takes 3 to 5 days to do, and they give you a day and a half to do it. So it's this like never ending, like drinking out of a fire hose. Like you can never just catch your breath, because they're like, okay, well, cool, you're doing well on this one, we're going to give you another one. And it was just like this never ending cycle. It was a great experience. You work with some of the best people in the world, literally. You work with, like, the clients are some of the most unbelievable people in the world. The people you work with, like, the culture is outstanding. But what I really took away from it more than anything else was the ability to work like tired, like with absolutely relentlessly, with like no breathing room, and just nonstop, and like being productive. So to the extent that the footnotes didn't have the right punctuation, or something was like lowercase, like, that's like not financial advice or whatever, like past performance does not indicate future results, like the very, very tiny font at the bottom, like if that's not correct, people know, and they call you out. And there's like truly a standard of excellence at this firm that has like really rubbed off on me. And like that's the way that like I treat everything now, is with this like standard of like excellence. And like I want to make sure that I'm always like operating at a very high level. And like the details matter across the board, and it's something you really learn there. It's like communication matters, like teamwork matters, the details matter, and it really translates to a lot of areas in your life. Like even whether you apply it to trading, whether you apply it to work, whether you apply it to your relationships with your friends, or like the goals that you have, the details really matter, because those are the things that like build you the solid foundation that allows you to kind of like build higher, because you're building a very solid and wide foundation. So like the little things very much do matter. I mean, it was an amazing experience, but it's just, for me personally, it was an incredible amount of effort and time to put in, with like realistically, like not that much upside. Okay. Relatively speaking, of course, because it's an amazing job. It's harder to get than getting into Harvard, but truly, the amount of effort and energy you're putting in is not worth the upside, in my opinion. Everyone has a different opinion. Like some people are more risk oriented, some people are not, but in my opinion, it was not worth it.
This is why a lot of people leave the banks to go start their own stuff, because they're working tirelessly and they own nothing of it, right? Yeah. So great. Now let's go ahead and move over to the gap fills. The main event here is the Edgeful. I'm gonna go ahead and put it. Let me see. Do I have it on here? The Edgeful.
Yeah, you should. I think you do.
It says it's live. There we go. The Edgeful technology. Now you on TikTok, you're not gonna be able to see it, so I'm gonna pull it up. I'm just gonna pull it up right here. This is what the platform looks like, and we're gonna talk about this platform, how to simplify the trading process with data. Yeah. From somebody who worked at Goldman Sachs, right? Now, yeah, let's go ahead and start off with the gap fills. Tell us about the gap fill. What is a gap fill? I can pull up my charts, but kind of talk us through how this works, how you process it.
Sure. So do you want me to just kind of run through like top to bottom how the platform is laid out first?
Yeah. Go ahead and talk about the platform. Let's talk about the platform.
All right. So just very, very quickly, very high level. Everything, the entire navigation is going to be done through this section up here. The report type button, we have 3 different types of reports. We have price action, volume, and indicator reports. We have what you'll see, this thing is the dashboard. This is kind of like a homepage that allows you to see multiple reports at once. And then we have an economic calendar, which I will get to later. Then we have the report type. So right now we have the report type, we're in price action. Now we can go to all the reports that are within the price action report type. Then here we have every stock and ETF that you can imagine, and we are adding futures, Forex, and crypto, but we just need to build out one little piece that would allow us to integrate those properly, so then you can actually filter the data properly. Then we have the timeline. So everything that I'll show you guys today will be on a trailing 1 year basis. So it'll be from last March to yesterday's close, March 6th to March 4th. That's this trailing 1 year. If you go to the 2 year, we have these shortcuts here. It allows you to switch back and forth. Then we have a completely custom date selector, which just all you have to do is like click on the dates. So I hope everyone got that. It's a little bit quick, but I don't want to bore you with the small stuff. Then if a report has any variance, it's these buttons here. So we have the gap fill report, and it has 5 variants. Then we have a visual representation, a table representation, quick explanation like verbally, a little bit more detail down here, more verbal explanation. And the important one, which I'm assuming a lot of you guys will look at, is the video. So the video explains how to read the report, a actual live chart example, and how to apply this to your trading.
So nobody needs to, I mean, with the technology, with the platform, you don't need to know everything today. There's an explanation video and more to be built out over time. This is fairly new, a new tool. So everything will be at the bottom also, but all the, you're getting an intro to how it works in general. So we'll go ahead and go through the gap fills.
Yeah. And so one thing that I'll also mention is one thing that I'll also mention is that we're going to be including specific, this is not branded yet, obviously, but we're going to be including like specific breakdowns for each report. So even if you don't feel like watching the video, you'll be able to see what everything is with an actual example that's annotated and everything, just so you guys know. Okay, so let's talk about gaps. So in this report, what this measures, we're looking at SPY and we're looking at the trailing 1 year. And what this report measures is how often gaps up get filled and how often gaps down get filled. So you can see 61% of the time in the last year, the gap up has gotten filled, and 64% the gaps down have gotten filled. So let me show you what that is. Let me just open this up here. So you can see that the gap is from yesterday's closing price to today's opening price. So this was the closing price on Friday. Let me just do that. This is the closing price on Friday, and then it opened right here on Monday. So this is a gap down because price on Monday opened below Friday's close, and then it came up to fill the gap when price touched Friday's closing price. Does that make sense so far?
Correct. So the gap is the overnight, when overnight and then the pre-market movement of the price.
Correct. That's exactly right. So a gap, whether it's a gap up, so I'll just invert this scale. So let's pretend. So this would be the close. Overnight, it gaps up. Then it comes down to touch this previous day's closing price. So in a very, very simple example, if there is a gap up on a Monday, so let's say Monday closes at 100, Tuesday gaps up to 105. Tuesday has to touch 100 on Tuesday to count as a gap fill. And if it stays above 100 on Tuesday, that is a gap not filled. So I know I said a lot of stuff right there, but the way that you use this is it's a directional bias at the opening, at market open. So if you see that gaps up tend to fill a lot, that means that price comes back down. So you should have a short bias. It doesn't mean short at the open. It means you have a short bias and price is likely to come back down. If the gaps down tend to fill a lot, then price tends to come up. Now I'm going to show you something incredibly interesting that I've never seen on any social media anywhere. This is one of the things that we have been posting about. If you look at gaps on Mondays, gaps down on Mondays, have filled 100% of the time in the last year. Yesterday was a perfect example. Monday opened below Friday's close. It goes up to touch Friday's close. This has happened every single time Monday has opened below Friday's close. So how do you use this in your trading? If there's a gap down on a Monday, you should get long targeting Friday's closing price.
Okay, so basically, this is S&P 500, right? This is the stock we're analyzing the data for.
Correct.
100% of the time in the past year, the stock gap down on a Monday.
And then that gap filled is the important piece. 100%
Okay,
of
the
the
gap
time,
filled.
that gap filled on the Monday.
Now, can I show this? My audience is probably used to seeing my charts. They might be a little confused. You know, charts are different.
Sure,
I'm gonna throw up my chart real quick just so they can see.
Yeah, of course.
Sort of how we would look at that. See, let's go SPY. Today is Monday.
Correct. So if you even just go to yesterday, that was the day. So if you if you just want to zoom in a little bit, you'll see it.
All right. So this was Friday.
Yeah.
Price close. Now, guys, this is after market hours. These are where the gaps move up and down. The price moves up and down. You have after hours here. You have the open on Monday. So
Correct.
The data is telling us that price started to move. It closed here and it ended up opening down, which is the gap down. Correct.
Correct. Yes.
All right.
And what this report measures is how often does price increase and touch that yesterday's close.
And I'm going to draw out the close, right? Because yours was kind of already on there. This would have been the close. So it gapped down. Oh, you can't even see it on TikTok. It gapped down and it opened and it went to go fill that gap no matter what, right?
Correct.
Fill the gap. Okay. And then go from there. I just wanted to show it on my chart really quick.
Yeah, no, of course. I mean, I know I have the black and white candles. I mean, it helps me, but I know everyone has like a different style. But yeah.
So Andre, are you saying now this is just because I know people are like, okay, this is a lot of confusing. How do we simplify this? Are we saying the data is telling us that if you were to get long, now this is not financial advice, but if you were to get long, try to play the gap fill, you would be 100% so far, you'd be 100% correct in the direction that price, when it gaps down, it's going to head for that gap. Now, how you actually execute it is relative to your skills, but it's definitely heading for that gap.
Yeah. So in the last year, that it has happened every single Monday where price is open below Friday's close. So pretty much what you need to look for is today Monday. Yes. Did we open below Friday's closing price? Yes. That means that we should be very bullish on that day. That's it. Be very bullish on the days where it's a Monday and we're opening below Friday's closing price.
All right. I'm going to throw yours back on there so people can see that gap down, point it out really quick. 100%. Okay.
100%. So every single time that this has happened overnight, it has gone up to touch Friday's closing price. So this helps you understand, like, you don't want to be bearish if there's a gap down on a Monday because historically price will increase. So just to take a step back and kind of like simplify a little bit more, when a gap down fills, that's bullish because price goes up. When a gap up fills, price comes back down to fill that gap. So everything is relating to yesterday's closing price. That's it. You just have to look at yesterday's closing price. If today opens above, then you should be bearish. If price opens below, then you should be bullish.
Andre, do you mind going on your trading view? A lot of people use trading view and kind of show them where the closing price. Do you actually use a closing price indicator? Show it so it tells you on your chart.
This personally I drew out, but what you can do with trading view,
because it's not going to show you last week because it's today, but there is one, right? Doesn't it show you on trading view?
Yes. So what you can do is actually, if you right click on the price axis and then you go to lines, and then you could look at previous day's closing price line. So what that does is it automatically will set a line for the previous day's closing price. So this is not relating to the gap. Like this is not relating to the story of Monday, but this, like, just as like a trading view tip, is this line will be plotted on yesterday's closing price, and it updates every day. So like tomorrow, this line will move. The day after, it'll move again. because it's relating to yesterday's closing price.
All right. And that's important because if there's anybody here that's a beginner, they're not even going to see where those opening lines are at. So it's kind of like, okay, this is how you do it. You right click on Trading View,
Yep.
right? You
On
go
the
down.
axis. So you have to right click on the price thing on the price axis right here, and then you go to lines, and then you make sure that previous day's closing price line has a check mark next to it.
There we go. Perfect.
Yeah.
Perfect.
So, and that is that's the line that you target for your trade.
Perfect. And if you want to back test like we did, can you zoom into that Friday? Because I know people are going to ask these questions. Can you zoom into that Friday at the close and just show, like, erase what you already have up there and show how you charted on there? Because watching somebody do it is a lot easier. So you find the close.
Yeah. So right now I'm just on the 15-minute. It doesn't matter what time frame you're on. And the way that you want to do is you want to look at the last candle of the market open. So the last candle of anything before 4 p.m., all you have to do is mark a line at the close of the candle. And that is the line you need. That's it. Only just mark a line at the close of the last candle's closing price. That's it. So whether we go on the 5-minute, whether we go on the 1 minute, it doesn't matter. It's always the close of the last candle. That's it.
Easy peasy.
Easy. Yeah. I mean, you could even do it on the daily too and just mark the close of the daily price. It's just always easier to visualize it in this way. So whether you do a 30-minute candle, it doesn't matter. It's always the close, the previous day's closing candle. All you have to do is go to the closing price, mark a line at the closing price. It doesn't matter what time frame you're in. If you trade the 1 minute, the 5 minute, the 2 minute, the 10 minute, the 15, it's always the closing price of the last candle of the day.
Perfect.
And that closing price is what dictates the gap fill. So today, I'll just kind of go over this one more time here. So in this case, Monday opened at 512. Let's just say Monday opened at 512. The gap fill line was at 512.85. So it was an 85-cent gap down. And what that means is if you could find a good long entry near the open, you can target the gap fill. Because historically, on Mondays, this price movement upwards is going to happen. Every single Monday in the last year, price has gone up and touched this closing price, yesterday's closing price. That's all a gap fill is. Price opens below a gap down, price opens below yesterday's price, increases, touches this line, and that's a gap fill. That's it.
Right. So the data 100% of the time is only speaking to once it has closed that gap. It's not giving you anything else after that, just
Correct.
from the open to the gap close, right?
That's exactly right. So even in this case, this counts as a gap fill. If it never continued higher, that would still be a gap fill because price touched this line. So there's no guarantee of anything in excess of that gap fill. We're only telling you that in the last year, this has happened. Now, personally, I'm not expecting this trend to continue very much longer, but it still means that Mondays are very bullish on a gap down. So if next Monday comes around and we have a gap down and it doesn't work, it doesn't mean that it's never going to work again, but it's pretty shocking that it's happened 24 times out of 24 times. So just keep that in mind, because if it doesn't happen next time, don't be really upset. Just take the next trade and take the next trade, because just as a kind of a side point, you should always think about your trades in the next 100 trades, not in that trade that you just took, whether you won or lost on that trade. So even if you have a huge profit today, think about the next 100 trades. Don't let that affect your ego. Don't let that affect your confidence, because don't drag that into the next trade. Always reset. And just because you have a losing day today, it's part of the plan. Nobody has a 100% win rate. So
Andre, what would be the wrong way to use this data on a Monday, right? Because think about the wrong way to use it.
That's a great question. So personally, I do not ever recommend someone just buying at the open and hoping it goes up. So, because historically, if you look at the other weekdays, They have a very different fill rate. So sometimes it doesn't fill. Like Mondays are really like a crazy day. So you don't want to just buy at the open. Even for Fridays, for example, Fridays have almost an 80% gap down fill rate, which is in the same case, price opens below yesterday's close and comes up. What I never recommend is just buy or sell at the open, targeting the gap fill. You should find a good entry. Make sure that buyers are stepping in. If you're long, make sure that you have a good risk to reward. Make sure that buyers are stepping in, that there's good volume, and like the criteria is fitting your strategy and like how your personality is in terms of trading. Because just because gaps down on Fridays fill almost 80% of the time doesn't mean that the day that you do it is not going to be in this 22%. So you always want to make sure that it's a good trade regardless, because you don't want to just blindly buy at the open or sell at the open. And you don't ever really want to do anything like just blindly. You want to make sure that it aligns with your strategy.
Perfect.
Yeah.
And we're not really focusing on like entering. This is more so the underlying data that tells us where the best quality probability is headed.
That's right. So, and just to kind of like add on that, everyone has such a different personality and they have such different trading styles that to say like this is the best style and that requires you to be at your screen all day. Like if you have to leave the house for your job, then that's not the best style for you. Like if you're a swing trader because you have to leave the house, so like you can't be staring at the screen all day, then that requires a different trading style. So there is no, like what we don't really want to do is say like buy here, sell here, your stop loss should be here, because everyone's account size is different. Everyone's risk tolerance is different. Like you still need to sit through the trades. So what we do is we tell you the data on like how things have played out and how like stocks personalities and like different weekdays personalities. And we allow you to kind of use that data to apply to your strategy and your personality.
Perfect. Let's give the analogy now. I want you to give the analogy about the club.
So every weekday for SPY specifically, and every stock for the most part has their own like personality. And for SPY, each of the weekdays have different personalities as well. So I'll actually give a good visual representation here with this report. So right now I just switched to the volume report type, and I went to the average volume and range by weekday. What this report measures is the average volume, which is these blue bars, and the average range by weekday. So the range is just the high to the low. It's literally like how much opportunity is there on a certain day. So you can see that there's a clear uptrend going throughout the week, and Mondays have the lowest volume and the lowest range of any weekday. Sorry about that bubble. I don't know why that happens.
No, you're good. I don't even know why it happens.
Yeah. So Mondays have the lowest volume and the lowest range of any weekday. So what does that mean? The least amount of momentum, the least amount of meat on the bone, because literally the high and the low are smaller. So that literally means that there's less opportunity to capture. And when volume and range are low, that means price action is going to be choppy. So when price action is choppy, there's a lot of fake outs. A lot of people lose money. They want to force a breakout. They want to force a trade. And then that's when you start to lose a lot of money. Whereas later in the week, there is a lot more volume and a lot more range, which means that moves have a lot of momentum. There's a lot of opportunity on the table. So you can actually capture a bigger move that's like literally easier to trade because there's momentum behind it. So you're either right or you're wrong, like right off the bat. It's not a lot of fake outs and this garbage price action.
Right.
So to answer your question about the clubs, if you are looking for a breakout and you're looking for this big continuation move and like a trending day on a Monday, you're forcing something that it does not align with the personality of that day. So in an example is you're going to a club at noon on a Monday, hoping it's going to be packed with DJs and lights and everything else, when it's like, why would you go to a club on a Monday at noon expecting it to be packed? Like, Monday's personality in terms of SPY is a very choppy, low range day. So do not go into the club. Don't go into that day expecting a big, nice move because you're going to a club on a Monday at noon. So what you want to do is go to the club on a Saturday at midnight where then there'll be people, then there'll be drinks, then there'll be the DJ, there'll be the music and the lights, which is later in the week. So the analogy here is that to capture the nicer moves with a lot more momentum that are easier to trade, that happens when there's more volume and range. And for SPY specifically, that happens later in the week. It does not happen on Mondays.
Now to make, I'm sorry, go ahead.
No, please.
I was just going to say, yeah, and I know we kind of jumped around. I just thought that analogy kind of fits your entire platform because it's telling us, hey, if you're looking for a date, you're going to have a lot more opportunities, not on Mondays, but on Thursdays and Fridays where the volume's higher, where the gaps, the probability of the gap filling is higher. So we're using data to give a bigger probability. You wouldn't, you might get a trade on Monday, but you're not going to get a trade on Monday every single Monday when you're trying to look for that big move. So you have to get lucky, which is not what you want to be doing in trading. You don't want to be trying to get lucky. You want to be executing here.
That's exactly
right. So, what was I going to say? There was something. Oh, that's what I was going to ask you. Now, can you quickly, now this is not just SPY, right? We're talking about SPY here. Can you quickly, everybody's looking at NVIDIA. Everybody's looking at, maybe Tesla, not really, but let's take a look at NVIDIA when it comes to the volume. Where's all the alpha? Where's the party at when it comes to NVIDIA?
So I'll actually pull up Tesla here. There's one that's like kind of the opposite. So Tesla actually, what's cool about this platform is you can instantly learn the personality of any stock. So instead of the screen time, the I don't know how, like hours and hours, like weeks and weeks of screen time, this app allows you to instantly learn the personality of any stock or ETF. And eventually it's gonna be futures and crypto and Forex. So you can see that if you were to just think, oh, SPY on Mondays sucks to trade, that doesn't actually apply to Tesla, because in the last year, Tesla has the biggest range on Mondays.
You see that?
So Tesla for Mondays is actually the best day to trade because it has the highest volume and the highest range of any other weekday. So in this case, going to the club in that example, Saturday at midnight is on this Monday. So like the best time to go to the club is Monday for Tesla. And the worst time is actually, I mean, in this case, it's like kind of more even across the board. There isn't really too much difference, but like Tesla has the highest volume and range on Mondays, which you would never know if you didn't see it in this manner.
Hey, let's do that. Okay, look at Tesla likes partying on Monday. Why? Because it's looking for a business deal, not necessarily a date. So that's why Tesla's personality is different, right? All the stocks have a different endpoint. They have a different goal in mind. Think of it that way. Show us on your chart. Go ahead and show us on your charts what Tesla looks like on the past. Let's do the past 3 Mondays, just so people can instill it in the mind when they see the data and then look at the chart.
So here, I'll just.
I have it up for TikTok already, so they can see how big of the move was on this past day for Tesla.
So perfect example yesterday. Tesla's range from the high to the low was $13 yesterday. So yesterday was Monday. Trading Tesla on a Monday has the biggest opportunities. So when there's higher range, there's more meat on the bone for you to capture. You want to trade in high range environments because that means you need to be less precise with your entries and exits, and there's literally more money to be made. If it's staying in a very small range, there's literally less money to be made because their price won't move as much. But when price moves more, you can make more money, obviously. So this is one Monday, it moved $13 yesterday. I don't even know, I need to scroll back here. Another Monday here, another huge move, another a $10 move here. And then even if you compare here, Tuesday was only $7. It's almost like 20% less. So let me just go one more.
So it's not bullish or bearish. It is the biggest move, whether it's downside or upside.
Yeah.
Okay.
Which is an important piece to note. So the range is always just the high to the low. So you can always think about the range, like even if when you like make this like gesture with your hand, like the high to the low, like you can think about it, like think about like eating ribs. Like you want the meat to take up the most amount of the rib as possible because that means like that's what you get to eat. Like literally like the most meat on the bone. Like you don't want a rib that has like this little chunk of meat in the middle and nothing on the end, or nothing like going out throughout. This literally is that. So you want the most amount of meat on the bone. You want the biggest moves because you can literally make the most money on the biggest moves. So again, another Monday here. This is Monday here. Actually, last Monday was a holiday. I was wondering.
Well, it was kind of tricky because it was like Monday, but does that correlate with the first day of the week? Maybe so. It kind of skews the data a little bit.
I mean, we don't. If there wasn't any trading that day, then we don't include it. So it doesn't count as a zero. It just counts as like a skip, if that makes sense.
Okay. Right.
Yeah. So you can clearly see that like Mondays have these insane moves, and those are the days where you want to trade. Those are the days where you can hold runners. Those are the days where you can set your profit targets a little bit further away. But if there are days like on SPY where like there's literally smaller moves, and like you don't want to set your profit targets farther away. You want to take what you can get. You can bat for singles, you can bat for doubles, and you take what you can get on these Mondays for SPY. And I mean, I haven't looked at QQQ, but I imagine it's pretty similar.
Let's take a look at NVIDIA. I know everybody's still, stuck on NVIDIA just to showcase where's the bigger moves. I mean, NVIDIA, the bigger moves every day, right? But where's the biggest chance?
So the biggest moves are actually on Mondays for NVIDIA, which is pretty hard to believe too, but they're pretty across the board. It's pretty like even across the board, just because I think it is the hot stock recently. So it always has so much activity. But again, like this has such a different personality from SPY and QQQ. And like, even if we went to, let's look at Apple, for example.
Oh, wait, can you clarify really quick the difference between the white moving line and then the blue bars? Because it looks like the blue bars is what we're talking about.
It's both. So,
okay.
So the blue bars are the average volume.
Okay.
Right. So the average daily volume. So I'll like the best visual example is SPY, but the blue bars are the volume. So you can think about it in terms of like the daily volume for this, like for all the Mondays. And then the white line is actually the range. So the range is just the high to the low. So it's not always like related. It kind of is. Like when there's higher volume, there's also higher range, but it's not like perfect. So you can see that Thursdays have the biggest range, but not the highest volume.
Right.
So what the white line shows you, Tesla actually has a pretty good example of it. Tesla has like pretty, like between Wednesday and Monday has like pretty even volume, but the range on Monday is bigger because that means the high to the low on average on Mondays are bigger.
Okay.
So that's the difference between the white line and the blue bars.
Right. So the blue bars are telling you the average volume, but not necessarily the average move. The white line is more so telling us the average move. So that's what we're kind of more focused on. And we want to reinforce that with the volume bar to make sure that volume's usually there.
Correct. That's exactly right.
Okay, cool.
That's exactly
that's a useful tool, man. That's crazy that nobody else has, I'm sure there's probably super high end. You're paying $10,000 a month for this kind of data.
I have not heard of a single I've gotten on hundreds of calls with customers, with traders. There is not a product that anyone has told me that they've seen like this, which makes me happy.
Right.
But
100%.
it's shocking to me, honestly. Like, it's just crazy to me, but it's very interesting.
Andre, did we miss anything on the gap fills? we kind of skipped over. Did we miss something on the gap fills?
Let me just check quick.
Because I think we let me see, price action, right? I'm doing it here on TikTok, price action. And then you go to gap fill, you have the standard by size, by weekday, by close.
So I can quickly like run through each of these because like for me personally, I think that this is what I look at the most personally. There's three things that I look at the most. The volume report that I just went over is one of them. This is the other one. And then I'll go over one more later.
Okay.
But we went over the standard report. This just shows all gaps up and gaps down and how often they fill. The gaps by size shows, so you can see, let me just go back to SPY. You can see that here, here. So this is, as we discussed, this is an 85-cent gap, right? So it's a smaller gap. You can see that all gaps less than $1 have filled, and it's super high. Gaps down filled 91% in the last year, and gaps up filled 80% in the last year. So when the gaps are smaller, they tend to fill much easier. So if the gap is small, like in this case, it's way more likely that they fill. But as your gaps get larger, then they become way less likely to fill.
Okay.
So when NVIDIA earnings came out for SPY, SPY was like here. So this is a huge gap for SPY. So again, I'll just do this live with you right now. How do we look at the gap? How do we look at the gap? I'm going to do it right now. So what are we doing? We're looking at Wednesday here. I'm going to take this line, and I'm going to put the line at the close of the last candle on Wednesday, which is right here.
Okay.
So 497.20. That's the gap. That's the gap fill line. And then now I want to check, where did day 2 open? And that is right here. 504, roughly. 504. So you can see that there is almost a $7 gap on SPY. So this is a $6.80 gap. Gaps between $3 and $5 already have, and there's incredibly low likelihood of filling. But when you go to gaps between $5 and $7, in the last year, it has never filled. So when you see a huge gap like this, do not expect this to come back down and touch this. You should not expect a huge gap on SPY to fill.
And I want to simplify it. So in general, the bigger the gap, the more likely there's continuation.
Correct.
From that, whatever the direction of the gap was, the more likely, right? And we have the data, this is what the platform's for, but the smaller the gap, the more likely, the significantly more likely it is to retrace and fill the gap.
Correct. That's exactly right. So when you see a huge gap, it's likely to continue. If you see a small gap, it's likely to reverse.
Perfect. That is great. And see, that is so simple right there. And I know, like, if you're new, maybe you need to see the charts a little more, but for the most part, if you're, it's really good information. There's videos at the bottom. He's going to have charts on there also.
Yeah. And by the way, each variant has its own video.
Okay, each variant has its own video.
It's not the same video for all gaps. Like, we have gaps by sizes, so you can actually understand how to like compare a gap in different sizes. So now we spoke about the weekday one earlier. You can clearly see how, as we shift throughout the weekdays, there's very different personalities that happen. So what you want to do again is you don't want to treat every weekday the same. As I mentioned with the volume report, you don't want to do that, because if you are going to the club on a Monday versus a Saturday and expecting the experience to be the same, that's insane. You don't want to do that. You want to go to the club on Saturdays and you want to go to lunch on Mondays. So having the right understanding to say, like, I know when to size into a trade. I know when to hold longer runners. I know whether to be bullish or bearish biased today. That's what this kind of like helps you do, and like the tool also helps you do.
And basically the tool is telling us where the most supply is on a Monday, Tuesday, Wednesday, Thursday, Friday, which one has the most supply. Maybe that changes over time also. It's not like, oh, well, I watched this YouTube video, Mondays are the best days. Well, over the next 6 months, that might change.
I'm so happy you said that. Because I've gotten this question so much of, what if I take a screenshot? Then why do I need to look at this? Well, then you're not going to capture the most recent trends. So let's say in September, you took a screenshot of Edgeful and you were like, oh, cool, I got the data. Well, we were in a pretty terrible downtrend going into September. And then from there, we've gone into all-time highs since then. And you would not see any of the data that we update every single day in here. So you can be up to date with the most recent trends. The data from when we started this company is not even close to the same as it is now. It's actually cool for me to see, because like I look at this every single day, and like I think that personally, I think everyone should, like all of our users should look at this every day, because there's like things that will shock you that when it comes to like the reports of like how it changes over time, and like it allows you to kind of like see things differently. But the data changes so much because we update it every single day. So then you get the most recent and up-to-date trends.
Right.
So
I mean, it's silly. It's silly because I know people try to hack the system. Like, why would I try to purchase this tool when I can, it's almost like, okay, I'm going to watch Netflix. I'm not going to pay for it. What I'm going to do is video record the Netflix show. Quality sucks. The difference is this data changes every day, guys. So
yeah,
you can't really hack it. It's giving you a feedback loop on real time data. And, the weather, I think of it like the weather. The weather is very hot in the summer. And it's like, okay, I know it's hot. Of course it's going to be hot. Then it starts to change into fall.
yeah,
And if you keep wearing nothing, you take your clothes. If you think it's still going to be hot, next thing you know, it's winter time and you're not dressed appropriately. So are you dressed appropriately to trade the market? This is giving you the seasonal update. This is giving you this is telling us how the weather is changing throughout the year.
yes, that is an amazing analogy. That is an amazing, amazing analogy.
I just wanted to throw some out there. We got a Carbides. He's a trader. We talk all the time. I might introduce ATR, like mentioned, for weekdays. I tend to base my upside expectations based on higher time frame patterns, volume during the trade, and candle sizes during the trade. And the great thing is, Carbides, is that now we have the institutional data in our hands right here.
Perfect. I'm so happy that question came through. I'm just going to jump to the ATR report. Is that fine?
Okay, I'm gonna throw. Yeah, there we go. Let's go to ATR.
Perfect. I'm so happy that question came through. I love when people know what ATR is. I love when people use it. So, as a reminder to anyone who doesn't know what it is, ATR is called the average true range. You can just think about it in a very simple manner. It's just how, on average, what the high to the low of a stock is. And it's just the average. So, for example, for SPY, the ATR is roughly just over $4, which means that from the high to the low of the day, you can expect.
I'm sorry. Can you highlight that on the thing? I know people are gonna say, "Where is it?" Yeah. Remember, I was confused at first. Show them where that ATR is, so they can say, "Oh, dang, I can use that tomorrow if I needed to."
Yes,
okay.
That's exactly right. So right here, I hope everyone can see that. And this updates every day. So you can think about this in terms of the high to the low of the day, and so like every stock has a different ATR, obviously, because like Tesla is closer to $10. SPY is closer to $4. So that's what ATR is. You can just think about it in terms of like, what's the average high to the low of the day? So if it's a $4 range, ATR will be close to $4. Does that make sense in that explanation?
Right. 100%.
Perfect. So let me go into this report here. And I love this report. This is actually the third report that I was talking about earlier of the three that like are my like holy grail kind of. This is the last one. So what this report measures is how often today's price will exceed this $4 range, or how often it stays within the $4 range. So if today, I mean, we can actually just use a real example. I think it'll be the best case. Let me just go to today. So let's look at Mondays, for example. The low of the day is right here, and the high of the day is right here. So you can see that there's a $2.20 range today. And what this report is measuring is how often is the high and low of the day less than the ATR, or how often does it exceed the ATR? So you can see that 66% of the time, price is going to stay below that $4 range. So how do you use this? If you want to catch a reversal, you can set your reversal. If it's coming into that full ATR, it's going to respect it. So let's say price moves up $4, and you know that 66% of the time it's not going to go further, then you can get short around that $4 mark, and then it'll reverse. If you're long, right, and you're long at the open, you set your profit targets $4 away because you know that historically it's not going to go $6, $7, $8. So you maximize your winning trades by taking profits where you should take profits, which is where the data tells you that price is likely to reverse.
Increasing the probability.
Exactly.
Increasing the probability. Now, I wanted to preface really quick, okay? I don't know who's watching this, but if the ATR is 4, like you're saying, that we're talking S&P 500 here, SPY. So the ATR is $4.19. That is today, right? That's not some that is what the average is from the past 100 days.
It's the past four. So ATR is calculated like traditionally across like any platform is 14 days. It's the rolling 14 days.
The rolling 14 days. So the past, and this is traditional, on every platform you're going to see that for ATR, $4.19. Once the ATR is reached, maybe you stay patient, you don't trade anything, or maybe you are, but once it's reached, this report is telling us, okay, once it's reached, what is the probability that it either stays where it's at or it reverses in the other direction?
Correct.
Right? Looking at what is it? Black, right? Looking at black.
Yes.
Now the blue, here's what people need to understand here. And I know it's just how I think it through too, is if there's some type of market event, like if you had earnings, okay, take this report out, right? It doesn't, or maybe you have the earnings report. If there's earnings, if Russia dropped a nuke, if the Fed just cut rates randomly, well, the report is off now. This is the average. These are averages, right? And I just want to point that out because people are going to say, oh, well, it's not perfect. It's not going to be perfect. Well, duh, it's giving you the probability. So make sure the day is a boring day. Boring is better.
Yeah, so it's exactly right. So only 34% of the time, the range will be more than like $5 or $6 or whatever. So like it obviously happens. We're not saying it doesn't happen, but it only happens 34% of the time. So if you want to take this side of the trade, just keep in mind that it's more likely to be a loser than it is to be a winner, because 66% of the time you know what that range is going to be.
Are you more? Oh, sorry. Go ahead.
No, go ahead. What were you going to
ask? Yeah. Just to, again, one thing I'm learning is to simplify things for people. Are you more willing to jump out of an airplane if the parachute's going to release 66% of the time or 34% of the time? Right. Yeah. That's how you got to look at it. What, you're taking a risk here. So are you more likely to jump out at 66 or 34?
Yeah, that's right. And that applies to everything here. Like even something that's 90% probable, like, yeah, it's 90%. It's not 100%. So if you do use this and you take a losing trade, it doesn't mean that it's not going to work next time. So don't let it get to your head. Don't let it get to your emotions, because like this is all over the course of a lot of trades. So just keep that in mind of like everything in trading is a probability in terms of whether it's going to go in your favor or not. And it's just, you want to position yourself to be on the side of the odds. And that's exactly what this product does, is it shows you the odds to say, okay, this is going to happen 66% of the time. I want to be on this side of the trade and not on the side where I'm going to jump out of a plane and it's going to open 30% of the time. I want to be in this black here. I do not want to be in the blue.
Right. I want you to finish ATR, but we had a very good point here from Dimaj. If you want to finish, I want to kind of show them, like, there's a lot of dissolution about what the data says here and there, and maybe we could just jump into it. It's not like, he doesn't have too much time, so I'm going to go throw it up. Dimaj says, this software looks great. However, stocks very often vary against on what the data show. Now, what I want you to do is show them the volume trend. Right, let's go to the volume trend, because he's not a day trader, so I know he's asking for more of a longer macro swing trading standpoint. There we go. Let's look at the data trend and then let's quantify this data, because you're right, but it depends what data you're looking at. It really does depend on what data you're looking at, and typically the data is telling us the probability is in favor. It's the sentiment data that is opposite, but that's not hard data. That's soft data, Dimaj. Sentiment is negative. We've been going up because that's sentiment. That's not hard data. This is actual hard data, so it's a little different.
Yeah. And just to kind of like touch more on that, in terms of like expanding on that a little bit, I mean, I'm not personally like sure what that means in terms of like stocks go against what their data says. We're not talking about like what the CNBC analysts are saying. Like everything in here is not a matter of opinion. Like everything in here is actually like the historical data that has actually happened. Like none of this is saying that like, oh, SPX is going to hit 6,000 or like Tesla is going to go to $50. Like nothing in here is an opinion, which is really nice for me, because it's just like, this is actually what's happened. Like this is not like my beliefs or my thoughts, or I think the video is going to go to 3,000. It has nothing to do with that. Everything in here is actually what has happened, and it puts the probabilities in your favor. So in terms of the analysis, like don't think about this, and I'm not sure if it is, I don't want to like put words in your mouth, but like don't think about this in terms of like the stuff you hear on CNBC of like people saying, well, I think that China is going to do this, and I think that that's going to affect like the stocks in this way, because this is just like very like black and white for the most part, very like black and white of like, is volume lower this on average, lower than average on this day, or is it higher? Does your strategy fit higher than average volume environments? Great. Well, then you should trade on this day. Is the range for the day smaller today? Okay, well then maybe I don't trade today. Maybe I'm expecting a smaller range. It's more like black and white rather than more opinion based. If that makes sense. Did you understand the question differently?
No, I think, a lot of people just, it's hard to trust, it's hard to trust. And that's why I think showing the actual charts, and maybe, maybe we can do this if you have time in the future to go through the actual charts and the data as it evolves, because it's hard to trust people. I get where he's coming from, because you have people on CNBC. Well, every time this happened, then we're doing this, right? But they're adding in multiple factors. They're adding in every time the Fed cut rates, they're adding in macro things from the yield curve and all this, right? So this is more so, would you say now this is more so a day trading tool?
100%. This is not a tool for investors.
This is not an investor tool. This is a day trading tool. That's the difference, correct. I would say, Dimash.
Correct. Yeah, like definitely not for investors. I mean, in terms of investing, like it's like longer term, like multi-year investing, like this tool is not for that.
Right.
This tool is for people that scalp, that day trade, that swing trade, and like at most swing trade for a couple months, at most. But like for the majority of all the reports that we have, they're designed for day traders. So holding a trade for an hour, 15 minutes, a couple hours, that's what it's designed for. So in terms of the trust, I mean, the data, we get it from, we actually have data providers from we have multiple data providers. So we can ensure that all the data is accurate. So we back check each of the providers like among each other and among like compared to the exchanges, and then we like make sure that everything is accurate. So nothing in here is an opinion or is like manipulated. Like it's literally like what it is, and we're only reformatting it so you can actually like understand it and like take it in and apply it to your trading.
Right. So it's more so dating skills, not marriage skills. Totally different. Totally different analogy. I mean, I just, for dudes, you make the analogy like dating is not marriage. It's a different, you bring a different execution to that type of environment.
Correct. That's right. Do you want me to finish up the ATR report?
Yeah, let's just finish up with that. I just wanted to answer that question. Let's finish up the ATR report. I know you got to go, and I appreciate your time so far, but let's finish up the ATR report. And I got it pulled up over here too, so I'm trying to keep up with you.
Good. Okay, perfect. And then, so we just discussed that, and then everything in here that we've spoken about, just so everyone knows, so I make it very clear, this only applies to, for the most part, like intraday, like day trading, or maybe swing trading, but for the most part, it's for day traders only. So just something to keep in mind. So we went over this ATR report. What this shows is how often does price exceed the average range or stay within the average range, the high to the low. So you can see, as a reminder, on average, price is going to, the high to the low of the day will be less than $4.20. So you should set your targets within that range. But what's very, very interesting is when we go to the weekday report, you can see that Mondays respect that ATR 83% of the time. So now you have an extremely high confidence in this range being respected. So pretty much what this means in like a broken down version is you should never expect a move more than $4.20 on a Monday for SPY ever. Because that would mean that you're jumping out of that plane with a parachute that's going to open 17% of the time and not 83% of the time. So you don't want to put your profit targets $5 away or like outside of what that range is, because it's not going to get there. It has only happened 17% of the time in the last year.
Or even more so, you don't want to try to, SPY is super bullish. This is on a Monday, right? So SPY is super bullish on a Monday. it's up $4, $3, and now you want to go with the trend. Well, the data says that trend is going to reverse, at
Yes.
some point. So like I know a lot of people get caught that way where it's not even, they don't set price targets more so. I don't really do price targets. I more so look at how the volume is, how the trends are. I'm looking at
Yeah.
different stuff than a price target. So for me, the mistake would be, okay, this is very bullish, and I try to get long, betting that 70%, 17% of the time, very low probability that it's actually going to break out and give me anything. And then what do you do in your head? You say, oh, well, I need more. This is a small move. I need more. And so your
Yeah.
psychology is jacked up because you want more, but the data is telling you there's not much more on the bone.
That's a great point, actually, that you don't want to FOMO into a trade when it's at the top end of the trade, because
Right.
there isn't, on Mondays, historically, it's not going to get there. But again, I was just saying, every weekday has their own personality for SPY and for almost practically any stock. As we go throughout the week, that changes very drastically. So 47% of the time on Thursdays, price has exceeded this $4 range. So Thursdays, as a reminder, have the highest volume, have the highest range, and exceed ATR the most of any weekday. So what that means is, these are the days where you can go for home runs. These are the days where you can go for triples. These are the days you can really bat for the fences, because it has higher volume, higher range. It actually exceeds ATR, so you can hold runners. Whereas on Mondays, as we discussed, lowest volume of the weekday, lowest range of any weekday, and does not exceed that ATR 83% of the time, which means the least amount of meat on the bone, most likely to get faked out, choppy price action. Or later in the week, you have these beautiful long moves. And if you're trading options, I know that we were going to talk about options, but if you're trading options, Wednesday, Thursday, Friday are the best days to trade options. There's the most volume, the most range, the most momentum. And like, if you're trading a shorter expiration, like, you need that momentum for the options contracts to move. Right. Whereas Mondays are horrible days to trade options. Horrible days to trade options, because, again, for all the reasons that Monday sucks to trade for SPY, is the same reason why you should not trade options on Mondays. Futures are much better to trade on Mondays. Options are better to trade on Thursdays, and Wednesday, Thursday, Friday.
Okay. Why futures? I don't know if I've never traded futures. Why futures on Monday?
Well, the reason is because the Greeks and like the time decay doesn't impact futures. So
Okay.
if you enter and then you have a profit target of, like, let's say $5 away, and it's just chopping around all day in this area, you still know what your stop loss is, because the time decay isn't going to kill your premiums. So like, if you do that with options, right? So let's say you enter and then price goes up and then it comes back down and it's going up and down and up and down all day. What happens to your options premiums is that the volatility dies, the time decay starts to kick in. So even though price is moving in your favor slightly, the time decay and the Greeks are taking away the value of your options. So then, like, now you need to move up your stop loss, because the value of the options are dying because the move isn't happening quick enough.
Right. So more specifically, on Mondays, when there's not a big move for S&P, you probably want to stay away from options. Maybe shares or futures would work,
Yeah.
but options specifically, the time decay is going to eat you up, because it's just not that, the data's telling us there's not that big of a move here. Unless you were selling maybe options, correct?
Yes. No, I mean, I don't know. I mean, I have some time if you want to go into that.
Yeah. How much time do you have? Because there's a couple more one more thing I wanted to go over. How much more time do you got with us?
Okay. I mean, I could do, what is it, 3:00 now, and we can end it at 3:30. I do have a call at 3:45.
3:45. All right. Let's go a little further. Go ahead on selling. Explain to them the option selling.
Okay. So option selling. So when you think about buying options, what you're doing is you're buying a call. Let's say you're buying calls, right? So you're buying calls, and what you want is you want price to move up. Obviously, if you're buying calls, you want price to move up. When you sell options, the idea of selling options is you want the price, like the value of the option, to decay, to go to zero. So then, like, theoretically, you can buy back for zero or just let them expire worthless. So now you capture all of the premium. So when you sell options, you want as little volatility as possible. You want low volume, you want low range, because when that happens, when this choppy garbage price action happens on days like Monday, the options premiums die quicker. And I'm sure there's a lot of people that have been in an options trade on a Monday or on any day where it's just chopping around and their P&L is slowly going down, even though price is hovering in the same area. That's, as a seller, what you're capturing. So just to kind of like simplify it a little more, when you're an options seller, if you were to like sell puts, for example, you just don't want price to go down. If it stays horizontal, if it goes up, if it goes to the moon, if it chops around all day, it doesn't matter, because if it doesn't go down, then you'll make your money.
Can you take us to the chart? Let's see. Yes, as a matter of fact, we can look at yesterday. If you guys would have tried to get long calls yesterday, then you're on what time frame you on?
This is the 15-minute, but I can go to whichever one you want.
Yeah, jump to the 1 minute, because I know people are at the open waiting. It's gonna look a little different for Monday. 1 minute, first, third. And first of all, if you're not if you're a beginner, maybe you want to be careful with trading the open anyways. So
yeah, that's definitely true too. The 1 minute here, so like if you were to take calls on this Monday and price is just moving up and down and up and down and up and down, and it's just like really not going anywhere, because you have to keep in mind, like, this might look like a big move, but it's an 80-cent move from the high to the low here, which is not a lot for options. So like, think about it more like that, where it's like, oh, this is like barely moving. And when it barely moves, what happens to the premium that you're buying? So, and what I mean by premium is like the value of the options. It starts to slowly die if you're trading like the weeklies or whatever. So if you trade like this current Friday's expiration, this is not something you want to be in, because this is very choppy back and forth price action. It's going up, like even right at the open, like came up, came back down, came up, came back down, came up, came back down, came up, came back down. Like, and it's just horrible price action to trade. So
I mean, if you bought at 512, let's go to 512 60 cents. Okay, the breakout, right? From the previous, like a lot of people chasing breakouts, 512 60 cents. You bought there, you're not going to take that small win. You're going to wait. And then we roll forward, start kind of, if you don't mind rolling forward a little bit into the day. By the time you get to that last support, like I guess on that next dip, you're at the same on an option. Well, all the way to your right. I'm sorry, before it really broke out. Yeah, at the same price, you're at the same price right there, but your option is worth a lot less, even though it's at the same price.
Yeah, that's a great example. I mean, that's a great point. So even if you bought right here and you waited all day, you were waiting all day, and you waited all day, your options are probably going to be worth like 30 or 40% less, even though price is at the exact same 512.60 that you bought it at here versus here. And that's exactly what we were just talking about, where you need the move to happen, and it needs to happen quickly for the options to make sense, which is why I said that trading futures is better for Mondays, or I mean, whatever. If you want to trade shares, if you want to trade futures, it doesn't matter. But like, just options aren't very suited to Mondays, because even though you entered at 512.60 and now it's 512.60 again, your options, like, honestly might be 30 or 40% less valuable if you're trading that like weekly expiration. Whereas futures, for example, would be the exact same price. So if you entered at 512.60 and it went back to 512.60, you'd be the exact same price. That's the only reason why I said futures are better suited for Mondays.
Right. I think, honestly, I think the options talk, I know a couple of people will pick up on it. Most people, I think it's a little complicated. We'd have to do a whole episode on options for that one. Now, can we look at the weekday personalities for a couple stocks? I'm just gonna throw them out there just to see. Let's see the weekday personalities. And when we say weekday personalities, we can either use the gap or we can use the volume, right?
Yep.
Either one of them. I think let's go look at the volume. maybe the volume edge, because I know the gap one works really good with S&P. Other stocks are kind of random sometimes, but if you go to the volume edge and we're looking at volume by a week, let's look at Microsoft really quick. I want to take a look at Microsoft and see, okay, what is this data telling us? What is the optimal day and what is the worst day to trade Microsoft options?
Interesting. So practically very similar to SPY. Mondays have the lowest volume and range. Thursdays have the highest range. And I mean, Thursday, Friday are the days that you want to trade the options. Mondays, not so much.
Okay.
The difference is not as big as it is with SPY for Microsoft, but you can see that, I mean, it's probably more than a 10% difference from Friday's volume to Monday's volume. I mean, it definitely is. It's 20% difference actually, like close to 20% lower volume on Monday than on Friday. So I mean, like that makes a difference. Like if Friday has the most volume, you can always think about volume in terms of like how fluid the moves are. When there's a lot of volume, the moves are really nice. Whether it's to the upside or to the downside, the moves are very nice. And it's less likely that you get faked out, like in choppy garbage price action, like I just showed for SPY. And you want to trade in high volume environments because they have the most momentum, because there's a lot of people buying and selling, and that makes trading very easy. Trading by itself is hard enough. You don't want to trade and force trades for days that are not suited for your strategy and like how you trade personally. Like if you're a channel trader, if you like to buy the lows and sell the highs and you like to trade in this channel, this also helps you to identify those days. Because now you know that Monday's the day for me. Like if you like to trade a channel, Monday's the day for me. Thursdays are not the day for me. Like no matter what your strategy is, this tool can help you because you get to see the data as is with no opinions, no manipulation, like no garbage. If you're a channel trader, it works for you. If you're a breakout trader, it works for you. And this can there are so many different reports that you can use to kind of like refine your edge.
Now SMCI, go to SMCI because again, hot stock, which me personally, I think is gonna, who knows? But this thing moves so much, you better know what day is the best day. You better know what the best day is for this one. You're gonna get smashed.
Yeah, that's right. So I mean, I've never personally looked at this one. It's kind of crazy that the huge differences here. So Wednesday average range, so average high to low is 17, and Friday is 20, almost $25. Like
25.
that
There
is
you go.
such a big difference. I mean, I'll just do even like
stay away from SMCI unless you're selling options on Wednesdays. Yes. And then hey, Friday, take a look. It's not up or down. It's just the move. So that's why I love this, because this helped me out with Tesla. When you first showed me this, I started playing with it. I looked at Tesla and I was like, dang, the big moves are on Mondays. And then my friend was like, oh, you're right. Dang. And I went back to all the Mondays and I'm like, well, this is an edge, right? This is an edge. This is an edge for me. You might find it as an edge. Somebody asked, where do you find this? I don't have it on TikTok. Go to my YouTube and it's in the video on YouTube. You can also get Andre's information. You can get his Twitter, all his stuff. He posts stuff on Twitter all the time. But yeah, you can find it under my YouTube. I have a link on there for that. So you guys can check it out.
Good. Yeah. It's very even. I mean, for SMCI, I mean, the average range is a 50% difference from Wednesday to Friday. Like that's insane. I mean, personally, I don't trade SMCI just because like trading these, like the options are so expensive and whatever for a bunch of different reasons. I don't trade it, but it's a massive difference. One of the biggest that I've ever seen.
Hey, I had a question here. Hey, Carbides, you're gonna like this. I think he asked earlier. Is it in this one? I do like the tool. What I hear, I use similar data, but I track volume, open interest, volatility, implied volatility, ATR. I think he asked something about. Oh, here it is. Does the tool track open interest trends, IV, HV trends?
So we don't have options data in here. We're going to put it in, but as of right now, we don't have it yet, just because like we need to kind of think about how to keep that data simple. So we want to avoid this becoming like an analyst tailored tool, and we want to keep it kind of like for everyone. And to provide all the Greeks and like the IV and the delta and like all the gamma data that a lot of people have asked for. We're doing it. It's just hard to lay it out in a way that's easy for people to understand. So that's why what we're doing now is building more reports for like in this manner, and then we're going to add more of the options data and then the crypto and futures and forex, etc.
Awesome. So, and also you guys do custom reports. So Carbides, if you have an
Yeah.
idea, he can actually add that custom report. It's
That's
at the top
exactly
right.
right. Yep, right here. So this button you can see, I mean, you can also, the email is hello@edgeful.com. And what you can do is if you want to say, like, for example, let's say, I want to see a report that checks how often this week will take out last week's high or last week's low. And let's say we don't have a report for that, then that's something we can build for you. If you want to see, well, I want to know for every time ATR gets broken, what's the performance outside of ATR? So that 17% of the time, like what's the performance? Like you can think about anything you want, and you can reach out to us and we'll see if we can build it. For the most part, we can. Like some requests are a little bit insane, just because like we don't have the data. But any report idea that you have, if we can build it, we're going to build it completely for free. So you obviously have to sign up, and then we build as many reports as you want for free.
Right. So he can do that. And I know Carbides is always, we talk about that all the time. So yeah, check that out. And disclosure, that is my affiliate link. I don't like to hide people from nothing or from anybody. I bring you value, right? I bring you guys value, something that you might be interested in. You pay me back by going through my affiliate link, and that helps me out. So this is capitalism. This is capitalism. So we got to help each other out here. He also says, and I think he just loves the whole report, unless you can move the market, winning a trade is the result of other people's convictions lining up with yours. Knowing when those people are statistically present is really good. And that's exactly what this is showing us, is when the crowd is making decisions as a whole, the aggregate data. You want to be with the wave. You don't want to fight the wind. You want the tailwind. You don't want to be walking into a headwind and get a headache.
That's a great thought.
Andre, is there anything else you wanted to point out? Go ahead and point it out there. I'll as we close out here, point out anything else. I hope we could do this in the future, but yeah, is there anything else you want to point out?
I think we should definitely do this again. But what I'll point out is that when you use this, for the people that want to like really refine their edge and like, I mean, in my opinion, like take trading seriously, unless you're a developer or a quant on your own, it's very, very hard to make money trading without data. I mean, any feedback that you have, and I'm saying this so seriously, any feedback on how things are laid out, how explanations are done, how the videos are, we are inviting as much feedback as possible, because we're not stubborn with the design. We're not stubborn with how we think about things. This is a tool for traders, and we don't want to be stubborn with anything that we have done already. So if you have any new report ideas, or you have something else, or like whatever it is, if you want to see something, just let us know, because we're very flexible and we're willing to change it. Like we're pretty new, and we're working all day and night to make sure that this thing gets developed quickly in that golden fashion. We are making sure that this gets developed quickly and properly, but we are very much focused on the user feedback. We want to make sure that this is things that people like to use and like to see. So please, whether it's on Twitter, whether it's on email, whether it's on whatever format, reach out to us and tell us like, I want to see this, or this should change, or whatever it is. Like we take it very seriously, and like we think that obviously the user's opinion is the most important.
All righty, you guys heard it there. I'm hoping we can get a little more in depth the next time, maybe go over some charts, see how the data is tracking the actual moves for people. But again, I appreciate you, Andre. Thanks for coming on with Edgeful. That's Edgeful.
Yep. Thank you.
All right, guys.